Hey, welcome everybody to the 40 Finance channel. Today we're going to be talking about chip stocks, semiconductor stocks here in the first part of 2023. Is there still room for these chip stocks to go up? They've had a nice little start to the year. And here on the screen right off the bat, we have the SOXX, the iShares Semiconductor ETF. And over the past year, you're about minus 13%. On this particular ETF, which is a conglomerate of some of the names that we're going to talk about here today. But you know, I take that minus 13%, and I would say maybe not as bad as a lot of people would have thought. There's been a ton of pressure over the past year on semiconductors as folks were talking about, you know, would the demand start to dry up? So minus 13% on the 1 year, but if you take a look at the year to date, it's actually up 23%. So if you bought a single share of this ETF on the first day of trading, you're up 23%. And we've seen a lot of that type of price run up in technology stocks in general. Growth stocks in general have seen this small rebound. Then over here, you got the SOXL or SOXL, as I call it to myself anyway, which is the 3x leverage version of semiconductors. And year to date, you're up 78%. And if you placed a small bet on this one back in November, December, I remember doing a video where it was in the $7, $8 mark. That would have paid off pretty well. But of course, who knew that we would come into January and see this kind of run up? The question, of course, with all of this, though, is can it continue? What are the underlying valuations for these top semiconductor stocks today? And how do they compare to the past? Okay, so let's dig into some of these top semiconductor stocks and see where they sit valuation-wise. And to do this, I created a quick stock screener here on Seeking Alpha. And as always, if you like some of the tools that you see that I'm using here with Seeking Alpha Premium, my affiliate link is in the description. Works out to be about $10 a month. Lots of great features in here. Check out my affiliate link in the description if you're interested in learning more. Now this screener here is very specific for United States semiconductor companies that sit very specifically in that sector and industry. So you might have some other players that are categorized differently in terms of sector and industry, but for what we're doing here today, we're going to go right down to the ones that are classified this way. And if we sort by market cap, which I've done here, you've got NVIDIA on the top. And right off the bat, before we dig into NVIDIA, if you just kind of eyeball the highest market cap stocks here, when you take into account some of these Seeking Alpha grades and ratings, you can see that there's still a decent chunk of red, particularly when it comes in terms to valuation. We'll cover that on the individual ones, but the one thing I want to call out on valuation, even though this looks extremely negative here, the valuation is tied to the sector as a whole. So in this case, it's valuation compared to information technology. So it's not always apples to apples. We'll dig in and do the apples to apples comparison. One thing that's been pretty common with chips lately has been high growth rates, right? As demand exploded. And you can see that kind of sentiment might be slowing down here. So we'll dig into that, and just keep in mind that for a lot of these companies and for a lot of the stocks that I cover, a lot of the NASDAQ stocks that I cover, there is definitely a difference between growth slowing and not growing, or God forbid, negative growth, right? Taking a step backwards. We're not going to see a ton of that today. So growth is sort of a relative term. Next column here is profitability. Looks pretty strong on the profit side. Momentum, bit of a mixed bag, and then EPS revisions, and this is what we've gotten a lot of in technology and maybe across the whole stock market, right? Which is EPS revisions. This is from the Wall Street analysts, are coming down at a consensus level. We'll see how that might impact the current valuation for these stocks today. All right, first one on the board today is NVIDIA. Here you see the valuation grade and underlying metrics. We're going to be focusing on underlying metrics more than grade. See how it's sector relative. So we're not going to talk much about that in this video. But what I'm really looking for is something like this, which is the non-GAAP PE looking forward. Where does NVIDIA stand today compared to where it stood in the past? And that's what I'm going to use to kind of eyeball these and give you my gut feel on valuation. So NVIDIA today, with the current consensus estimates that are in the books today, you're looking at a forward non-GAAP of 67. This would be through the end of the next fiscal year. Now, one of the cool things that you do get on Seeking Alpha is the 5-year average for a lot of companies, particularly large and mega cap companies that have a long track record of these kind of financial metrics, right? They do the comparison math for you. And here you see that the 5-year average for NVIDIA is about 41 times. We're at 67 times, so, arguably, NVIDIA is still pretty expensive, at least from a non-GAAP forward view. You compare that to the forward PEG ratio, 3.13. 5 years average is 2.3. So not a good look in terms of trying to find NVIDIA at its cheapest price, say over the past year or two. Not really seeing that here. If we go to something like price to sales forward, which would give us some sort of an anchor to how revenues are trending, right? So price to sales about 20 times looking ahead. And in the past, NVIDIA's been slightly below 15. That's 37% more where it's at today. So at least on this quick view of valuation metrics, I'm not super excited on where NVIDIA stands today relative to price. Now, with that being said, if you're a buy and hold investor, and I have the QQQ, so I have a piece of NVIDIA in there somewhere, we know that NVIDIA is doing big things. We know that NVIDIA has constantly outperformed expectations. So from a long-term standpoint, aka 3 to 5 years, I'm not sure it matters. But if you're buying it today, to say that this stock is historically cheap, I don't think you can make that argument. All right, number 2 in terms of market cap is Broadcom, AVGO. Let's see where they sit. For whatever reason, they're doing well from a sector relative grade, but we are focused on PE non-GAAP forward and PE GAAP forward. I'm not sure off the top of my head which one Broadcom typically reports in. NVIDIA was easy because I know that they're always doing non-GAAP. So let's just take non-GAAP forward 15 times. Broadcom's 5-year average, and they've been around a while, is right in that 15 range. So I would say, basically flat to that regard. If we're going to go on GAAP forward 20 times, Broadcom's 33 times over the last 5 years. So here, at least on a GAAP basis, you could say maybe it's at a 37% or so discount to the 5-year average that it typically trades at. Looking at price to earnings growth, non-GAAP forward 1.2 times. Compare that to the 5-year, it's a little bit higher than we've seen in the past, plus 13%. How about the sales? So if we go price to sales, 7.29. In the past, they've been under 6 from an average standpoint. So if you're thinking about just straight revenue, you can make the argument that maybe Broadcom's running a little hotter. If you're worried about revenue growing exponentially, the valuation's running a little hotter. But on the EPS line, if they hit their consensus estimates going forward, then this stock is definitely cheaper than what we have seen in the past. All right, next up we have Texas Instruments. And here on the non-GAAP side, you are at a forward of about 24 times. That's slightly higher than the 5-year average, give or take flat though. When you look at the GAAP side at 24, it's pretty much in line with non-GAAP, so we're running about the same level there. How about non-GAAP PEG looking forward, 4.4, that's definitely hotter than what we've seen in the past, plus 81% over the 5-year average. Then from a sales perspective, price to sales forward, about a 9 times. That is just above the 5-year average there. So with that in mind, Texas Instruments running about $179. I don't see a lot of true value in here, at least as it relates to EPS and fundamentals. However, I do know that Texas Instruments, they are a dividend stock, and so is Broadcom for that matter. And you get about a 2.7% yield looking ahead. So folks that are holding Texas Instruments will at least get that dividend along the way. All right, next up we got Qualcomm. P non-GAAP forward of 14.6. That is coming in slightly under the 5-year average of 17.51. On the gap side, they do not have a 5-year average on the gap side for us to compare to. So all we get to do on PE is sort of look at it from this lens. When we do go to non-GAAP forward PEG ratio 2.5, that is running hotter. So the earnings growth, the price to earnings growth in this case, you're paying almost double from a valuation metric. But like I said before, if you're buying this one in terms of 3 to 5 year hold, you know, this is one of the biggest chip makers on the planet, sustained track record of success. They also have a dividend, and it looks like that's 2.2%. Flipping back here, just to go to price to sales, 3.99. Price to sales actually comes in under -8% on the 5-year average. So if I put, you know, sort of all those metrics together in my head, you might have a few more bucks to squeeze out of Qualcomm, at least until consensus estimates change. And at the end of the day here, if you're buying stocks like Qualcomm or semiconductor stocks today, then essentially you're betting against consensus earnings. So to some degree, we're just looking at the valuations on where they stand today. As the year progresses, more clarity will come in. You know, maybe EPS goes up. Everybody thinks that corporate earnings are coming down, and they very well might over the next quarter or maybe two. But really, when we're looking at some of these valuation metrics, we're trying to encapsulate the whole fiscal year, right? So if we're talking about the fiscal year of 2023, not necessarily next quarter, then you start to open your eyes to the possibility for some of these companies to say, hey, earnings could easily go up. You know, interest rates could stay flat, come down. The value of the dollar could come down, which inevitably would also boost earnings. Those are all positives for earnings that don't necessarily need a huge boom in sales to happen, right? More revenue helps on the earnings side, but when you modify your profit percentage or your margin by making cost cuts, you can still hit consensus or beat consensus even with flat to slightly declining sales. All right, next up we got AMD, price to earnings non-GAAP forward, which I know is what they reported, non-GAAP 28.19. 5-year average is 42. So you are getting roughly a 33% discount on the 5-year average for forward PE. That's pretty nice. Then if we go to PEG, price to earnings growth non-GAAP forward, you're at a 1. In the past, AMD's been closer to a 2. So you're looking at a 46% difference from the 5-year average in your favor if you were to buy today. Now, price to sales will go on the forward, 5.8. In the past, you've been 6.14 on average. That's just slightly under it. So with AMD, at least from an earnings standpoint, there is definitely a case to be made for AMD being undervalued, okay, at $85. And of course, if you are holding for long term, then it probably becomes even more of a no-brainer. All right, let's pick off one more here. Analog devices. PE gap forwards at 28. 5-year average is 31. That's a 10% discount, so to speak. Non-gap, you're at 18 versus 21. That's about 11% off of the 5-year average. If we go to PEG at 1.6, that's about 10% or so under the 5-year average. What about price to sales looking forward? 7.53 is the multiple, looks to be in line with what we've seen over the past 5 years. So just on these metrics alone, I would say there might be a couple bucks here in ADI. Obviously, you want to dig in. This is not one that I'm super familiar with off the top of my head, but the initial metrics, as it's compared to the historical past, says that there might be a little something in ADI, particularly if you're holding long, and particularly if you take a look at their earnings reports and their product timelines. If you see something you're interested about, this may not be a bad time to pick up a couple shares. All right, guys, so that's a quick look at some of the top semiconductor stocks in terms of market cap anyway. And overall, it was sort of a mixed bag, right? You had the AMD, which stood out to me as fundamentally undervalued. And then you had NVIDIA that sort of stood out as fundamentally overvalued. And this isn't the only piece to the puzzle when it comes to buying stocks. But I thought it'd be an interesting exercise because it's been a rocky ride for semiconductor stocks. They've recently got a little wind in their sails, so it's good to just check the temperature. You know, where do they sit now that we are officially in 2023, and potentially how much higher could they go? And before you go, don't forget to check out that special offer for Seeking Alpha Premium down in the description. Hope everyone's doing well. We'll see you on the next video.